In this video, we are doing a complete HIMS and HERS stock analysis for the year 2025. We will break down HIMS fundamentals, revenue growth, and in the end, valuation and price prediction, and talk about whether HIMS and HERS stock is a buy or a sell right now. Stick until the end. Hey everyone, welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor, and let's talk about HIMS and HERS, if this stock is a buy right now or not. So let's get into the HIMS and HERS stock analysis. Okay guys, before we jump into the full stock analysis, I would like to talk about the moat for HIMS and HERS, because I have been listening this around YouTube and from many other investors in my personal Patreons group as well, who are confused about the moat for HIMS and HERS, because everyone around is thinking that the only moat for HIMS and HERS is their GLP-1, but that's not the point. It's actually their platform. So let's talk about the moat first, because that is quite important. If the moat for a company dies, and if it was just focused on GLP-1, then there would not be any moat there because of the huge competition. And if the compounding is considered as an unloyal practice, and which might happen, and this might even stop for HIMS and HERS, especially considering GLP-1, then that means there is no moat left for HIMS and HERS, right? But that's not the point. So brand and subscriber loyalty is their first moat. The company has built strong brand recognition, especially in stigmatized areas like sexual health, mental health, and weight loss. Okay, there is not just one category for HIMS and HERS. They're compounding many other drugs for different segments. Backed by high marketing spend and public campaigns, example Super Bowl, no other teledoc company has nailed that. Okay, its subscription model generates highly recurring revenue with retention rates around 82 to 85%, guys. This is not normal for any telehealth company. Over 2 years and 90% of revenue coming from subscriptions. Show me another telehealth company which is growing at this rate and has such a loyal and subscription database and sustainability. So the scale of its customer base, over 2 million subscribers, strengthens customer loyalty, reduces acquisition cost over time. And this is a really good point. This is one of the biggest moats for HIMS and HERS, their subscription database, which is loyal, and the subscribers are coming back and again for customized drugs. This is the moat for HIMS and HERS, that they are making these customized drugs based on individual needs. If these drugs were not effective, the subscribers' strength and database would not be that big. And this again would reduce the acquisition cost over time. Yeah. Anyways, data and vertical integration. This is quite important as well. HIMS and HERS is developing an integrated care delivery system from diagnosis to delivery, supported by their AI platforms like MedMatch, EMR systems, and custom labs, which enhance personalization and patient retention. They have acquired facilities like peptide and lab testing units to strengthen supply chain and support vertical integration as well. So their acquisitions are not that bad. Economies of scale and cost efficiency. So economy of scale is quite important when we are talking about a tech business, because we would like to know if their operating costs eventually would reduce or not. So the multi-specialty platform allows them to cross-promote services, lower customer acquisition cost, and improve lifetime value per subscriber. The telehealth model cuts out intermediaries and increase margin potential compared to traditional healthcare channels. So these are some of the really important moats which people and investors are forgetting, and nobody is talking about them, to be honest. And now let's talk about what FDA is doing. Okay, so HIMS and HERS soared into the limelight at the height of an obesity drug shortage. The Food and Drug Administration allows compounding pharmaceuticals to make knockoffs of branded drugs that are in short of supply. So, okay, if we imagine that there is no shortage of supply and FDA will stop these compounding, then is that the end for HIMS and HERS? We will get on to that. We already saw the moat, and actually no. HIMS owns several, but the FDA determined the shortage of obesity drugs was over the spring. That meant HIMS and other compounders could only make personalized doses for the branded drugs. So there was a restriction. It's not like there was no restriction. There was a restriction by FDA. And that's why I'm saying that FDA might not stop this. But even if they stop this, that doesn't end the moat for HIMS and HERS. Why? Because they are not just into the weight loss segment, guys. They have sexual health, dermatology, mental health, hormonal, and longevity. Okay? This is not the only segment for HIMS and HERS. They had been growing at 70 to 80% before the GLP-1 was even introduced. Yes, GLP-1 did give them a huge boost because of the total addressable market for GLP-1 and the shortage and the demand. But that doesn't end the story for HIMS and hers. The moat which I'm talking about, platform is the moat, which has evolved to reach a broader audience by delivering exceptional service and offering access to data-driven personalized treatments. Personalized treatments. This is the keyword. And we can see this from the results. High quality service levels and personalized solutions are driving a leadership position. We can say from 2020 to 2024, they have had such a high growth. So share of observed total customers had been growing since 2020, and share of observed total sales had also been growing since 2020. So they are not slowing down. Now, we talked about the positives and the moat, but of course there are some concerns as well. The moat might be at a risk. Whenever we are investing in a company, we need to see the pros, the cons, the profitability, the future growth, but also the risk, which could be impacting the top line and the cash flow. So let's talk about where the moat is narrow or is at risk. First of all, regulatory vulnerability. A key growth driver has been selling compounded versions of GLP-1. We know that, and we are not denying that, okay? So for the weight loss, like semaglutide under the FDA allowances during a shortage only. With that shortage now resolved, the model is under regulatory pressure. We saw that because companies like Novo Nordisk is escalating litigation against many providers for these copycat drugs. But notably, not currently HIMS, still legal and regulatory risk remains substantial. So if something happens, then okay, we have to take out the revenue picture. We have to take out GLP-1 from their sales growth. And this is the headwind. This is the headwind we are considering. Now, I do agree that HIMS and hers might be on the higher valuation side because we need to see how the other quarters, future quarters do come into action, because we need to see the results from future incoming quarters after all this mess about GLP-1 is taken care of. Now, intense competition and lack of unique IP. The model can be replicated. Companies like Ro, Telehealth, and Amazon Clinic pose real threats with deeper pockets or established healthcare infrastructures. That is another threat to consider. Those companies, Telehealth, I wouldn't really consider, but I've still put this into the slide to let you guys know that there is competition. It's not like HIMS and hers is a monopoly. No, there are other compounders, and Amazon Clinic does have bigger, deeper pockets, okay? HIMS lacks strong patents or proprietary formulas, relying more on branding, operational efficiencies, and personalization, which is true. Now, brand exposure and reputation management. It is not that big of a deal, but still we have to consider that as a threat to its moat, which is marketing itself is of course always a double-edged sword, okay? This can of course attract missteps. Of course it draws customers, but it also draws regulatory scrutinies and can damage the trust and invite backlash, which has happened with HIMS and hers, to be honest. Now, murky compounding practices and legal disputes may harm long-term credibility and partnerships, which is kind of true, which happened with Novo Nordisk already, okay? It did happen with Novo Nordisk, and that might bring other partnerships also down the gutter. But we do see that HIMS and hers is doing acquisitions. Now, are acquisitions bad? Not necessarily, but does that mean that HIMS and hers growth is slowing down? Yes. Most of the times when acquisitions are done, that means they are depending now on external factors to have a boost on their sales growth. That means as a company, they might be seeing that, okay, in the future our sales might decline, and that's why they go and acquire other businesses. Okay, most of the times, 99% of the times, that's the reason. Now, as Novo Nordisk ramps up lawsuits over Wegovy copies, investors ask, where is HIMS? So we have to consider that Novo Nordisk is not slowing down, okay? Because we saw, and if you want, you can have a look at my video which I made on Novo Nordisk. The majority of the sales is coming from their GLP-1 drugs. So they will not slow down to bang the competitors, especially the compounders, because compounders are way cheaper, okay? So if someone will hit their cash cow, they will not slow down to remove them from the competition. So Novo Nordisk is coming for HIMS and hers. Now, I do believe that this forecast has taken all the headwinds into consideration. I hope so, because this is the latest earnings report from HIMS and hers. And it shows that 2030, Hims and Hers is trying to reach a revenue of $6.5 billion and an adjusted EBITDA of $1.3 billion plus, both are plus, okay? Is this conservative? Is this optimistic? I think it's between conservative and optimistic. We don't know how much of an impact of GLP-1 sales and the lawsuit from Novo Nordisk will put on Hims and Hers, okay? On the credibility of Hims and Hers for future partnerships and such, and also the subscribers growth, okay? That can affect many other things. If these are realistic numbers, which I do believe are, that's why I have made the model, and we take price to sales of 5, okay? As we can see right here that they have been fluctuating between 4 and 7, actually almost 7, but I will not take 7 into consideration, neither 6. I will simply take 5 price to sales ratio because I do believe that that could be a reasonable multiple for Hims and Hers in the future. So if we take 5 into consideration and if we take $6.5 billion revenue growth, we get a market cap of $32 billion. And Hims and Hers at the time of recording this video is sitting at a market cap of $10 billion only, 3x from here. Yes, and that is with a price to sales multiple of just 6. So what does this mean? It simply means Hims and Hers at this price is a buy, is a steal for sure. But are we dumping a lot of money into Hims and Hers? Well, not certainly, and not like huge amount. We do have a huge position. When I say we, I mean me and my Patreons. We do have a huge position on Hims and Hers, but we are dollar cost averaging our position, small amounts every month, because we do believe that it is a steal and it can 3x from here. I do believe that this is a misunderstood stock in the market, but we still have to be precautious. We still have to see what the coming quarters will be like. And if the coming quarters, let's say without much of GLP-1 sales, would still be amazing, we are going all in Hims and Hers. So that's it, guys. That was the stock analysis for Hims and Hers. I hope you like this video. Do watch this video right here because this is another amazing undervalued stock which I talked about. I will see you there. Until then, stay safe, stay healthy, and ciao.